Officer, Portfolio Wealth Advisors, and Andrew Wang, Managing Partner, Runnymede Capital Management. Glad to have you both on. Lee, I'll begin with you. Obviously, we're waiting on all things Zoom. You can expand. Tell me if you like Zoom and what you think about the whole work from home group. But first, your preview about what you think of Zoom.
Well, Zoom has to knock out the numbers. We've had a spike in COVID. Everybody needs to be at home using them. And we also need to have those retail users start to pay some type of monthly money to get in here. If not, I think you're going to have a problem with the stock. It's a $135 billion valuation right now. And what's going to keep it going is that COVID, we're going to have a lockdown. And that executive tomorrow on your show is going to have to explain to me and everybody else exactly how are we going to have the retail, individual community keep providing revenues to Zoom. Because at 135 billion, I'm sorry, I don't think businesses as their main client post-COVID are going to be able to keep that valuation going. So I think it's going to be very volatile. If you're a trader, love it. But if you're not a trader, I would stay away and find something else to play with.
All right, Andrew. I mean, they have spoken of doing other things with Zoom, trying to put all kinds of classes and things that you pay for. It wouldn't just be you talking to grandma over your turkey, right?
That's right. Zoom, we've got the poster child of the stay-at-home work period. And as you mentioned, people had Zoom at their kitchen tables over Thanksgiving. Zoom has become, it's gone from noun to verb, right? So this is a strong brand. And I think that you're talking about, I think there are a lot of interesting products that Zoom is releasing. It's not just the video conferencing. They are reporting very strong momentum with the Zoom phone, which is a cloud-based phone. They say that customers are really enjoying having a single platform with video conferencing and telephone. And it really plays into a period where people may have a hybrid workplace where you're partially working at home and partially working in the office.
Right. Lee, tell me what you do like. If you think Zoom is probably a little frothy, it's a good way to say it, right? And what do you like?
If I'm going to buy a big kind of high-priced tech stock, I'd rather find something that is going to get those users. Just like the other guest said, I may have a disagreement if that's really going to pull out. Remember, everything they said about the internet 20 years ago did happen. The issue is, are the valuations worth it? I would rather buy a Google. I would rather buy an Amazon right here if I needed to buy a high-priced tech stock, because I understand those business models, they're mature, they're cash machines, and they're not based on, they can pull levers. Zoom can only pull so many levers. We presume that everybody's going to want to use these Zoom calling features versus what is Apple going to come up with that's going to make it easier? What's Facebook going to do? So there's a lot of other competition that can come into that model and really wreck it. So I would rather go with something where, like with an Amazon, they pulled forward customers that they may have never gotten if it wasn't for the pandemic. Those people are hooked and are never going to go back. But that is a larger, bigger, there's just a lot more revenues, and there's a lot more things that a company like Amazon or Google can do. Again, it's not that I don't like Zoom. I use it. I pay them $15 a month, but I have some strong concerns that all of those things about Zoom, they're going to be true, but will the revenues, will the money come in as expected? I think there's lower risk bets.
Right. Andrew, what are your thoughts? I mean, what else do you like overall? I mean, I saw Apple got some nice comments today. You have Tesla going into the S&P 500. Are there any other high-flying type of names or very high-profile kind of companies that you like, Andrew?
Well, I think the tricky thing here is with the vaccine news, and this goes, looking as we observe Zoom similarly, the whole high-tech space, there's a seesaw going on every day. Is the economy going to reopen, or is the economy going to re-shut down again? So every day we see this tug of war happening. I think when it comes to Zoom, the investors are getting a little bit concerned because their transactional, their quarterly data transactions, which have been so strong in previous quarters, that's expected to slow down a bit here. So I still like Zoom. I think that investors are losing a little bit of conviction. They don't have the conviction that they had the previous 2 quarters. So it's important as we await the earnings numbers, I think it's going to be important to watch what is the trend for their transactional data, the dollars per transaction. Is that increasing or decreasing? Because as the number of transactions are beginning to slow, they're not growing at as quick a clip. Can they get that average dollar per transaction up to make up for it? And I think if they do,
Right.
I think that it's still a good stock to own here.
Right, right. What's your advice to investors, gentlemen? Andrew, quickly, I'll give you the first chart here. I mean, we've had some new highs. I don't know. Are you telling people take money off the table or buy the dips?
Well, it depends on your time horizon. I would say that it's interesting here because as with interest rates so low and going into Q1, Q2 of 2021, you're going to have earnings comparisons that are compared to earlier this year during the lockdown. So you potentially have very strong quarter over quarter numbers. You could have multiples stay where they are, but you have earnings growth. So one can make an argument that the stock market can go higher from here.
Right. Lee?
Oh, I think it goes higher. I just, a Friday or 2 ago, I took off some money off the table and I just rebalanced, right? It's not rocket science. When you're dealing with seasonally strong time of the year, which is, we're in the Santa Claus rally time going into January. Those are the strongest months of the year. So instead of being concerned about valuations, everybody is, but I think Andrew pointed out, interest rates are going to feed higher valuations. What I've done with my clientele, and remember, they're retired, they live off their assets, they're not young kids trying to get rich quick. So what I did is I just rebalanced. So if you're supposed to have maybe, 60% in stocks and 40% in bonds, we were riding close to 70% after that Biden bump. So I just did a very mundane, boring thing, brought it back down to 60%. I got a little cash on the table. I don't want to put it back into bonds because I'm worried about the 10-year treasury bumping up. But come hell or high water, between now and the end of this month, I'm going to get that money back in. I think there's going to be lower prices over the next few weeks. Okay. But here's a news flash. It's not going to be dramatic. I think it's going to be very an underwhelming pullback. We'll see what happens. Keep your head on.
Right. Well, we'll see. And if holiday spending is any indication, National Retail Federation and JP Morgan are talking about consumers getting ready to spend for the holidays. So that's going to give all kinds of boosts for the market in 2021. Lee Munson and Andrew Wang, thank you both very, very much for being here with us today.